The recording screen is sharing, and here are the slides.
I think you got to share.
Yeah.
You got to share and share screen and Teams,
Oh, Cynthia can see it.
so she can see it.
Mhm.
Go.
Did you?
Alrighty. So our accounting issues. Transactions are different in public sector than in private. So like donations. Pretty rare that a business will get a donation. Some of them are voluntary, some of them are involuntary. So an example of voluntary ones. Not unusual for somebody in their will. They got some property close to adjacent to a city park. And in their will, they will donate that land to the city as a gift to expand that park. Or to provide access, egress, or a path into a street or something that they don't have at the moment. Involuntary would be where somebody, a developer, is building a subdivision, and they put in streets and sewer and water, and they are required by the city to donate all of those infrastructure assets to the city. Exchange transactions, non-exchange transactions. That's kind of the core of our revenue model in the government. So examples are for exchange or water and building permits where they get something in exchange for what they give, and it's somewhat at market value, and so that it corresponds between what you get and what you pay for. Non-exchange property taxes are a great example. I've been paying for fire services and police services for years, but I don't think I've ever voluntarily used the police department, and I've never voluntarily used the fire department.
Is it wise to say exchange transactions are tangible and then non-exchange intangible? Or
Well, I mean, you pay property taxes, and if your house catches on fire, the fire department showing up and putting the fire out is tangible. You actually got something for your money. But there's no dollar for dollar correlation between what you paid in property taxes and the value of the fire department coming and putting out your fire or saving your life. So there can be something tangible related to involuntary or not involuntary, but non-exchange transactions. So, but it's less tangible, probably, you could say, because oftentimes you don't get anything of value. I mean, my own interaction with the police is an occasional speeding ticket, and I guess that's probably good, but it didn't help my bank account. Now Gatsby is coming up with a new proposal. I think, I'm trying to remember, FY26 or FY27, I think is when they're targeting for that to hit at this point in time.
This is from the revenue standard.
We're talking about revenue recognition.
Okay.
So for that, it'll be performance versus non-performance. And I don't particularly care for it. I think exchange, non-exchange fits the government model better. And I have testified in front of the Gatsby board about this, and they don't think I have a valid argument, so. But I think a lot of what they're doing, from what they have said in the hearing, was they're responding to FASB and IASB doing something similar, and they feel like they've got to follow the other standard setting boards, which I don't think is necessarily valid, but ultimately, my opinion doesn't really matter. What matters is what the accounting standard says, and that gives us our the framework that we have to work within.
So what does the performance, non-performance mean?
Okay, so a lot of grants. We will get a grant to build a specific road. Like we've gotten around $100 million from ODOT to rebuild 82nd Street. So the performance factor there is we've got to actually rebuild 82nd Street in order to earn the $100 million of grant money. Non-performance, then you're getting back to sort of like non-exchange where a property tax, you're really not getting any performance value for the revenue you give the city for your property taxes. So what we'll have to do there is basically go through every contract we have and make a determination as to whether it's performance or non-performance, and how the revenue gets recognized will hinge on whether it's performance or non-performance. Now, we'll get into it in a little bit, but revenue recognition now is driven by a lot by exchange and non-exchange, whether it's exchange or non-exchange. So it's going to be time consuming. And I think, as I said last time, I thought we should implement that at the same time as the new reporting model. But I suppose from a practical point of view, trying to implement two big standards like that at the same time would be difficult.
Yeah.
So we might actually be better off if they have broken them apart and are implementing them separately. So anyway.
Next.
So, in our general ledger, we have assigned a group code to everything. There's government-wide group codes, there's gap group codes that are broken down by governmental funds, proprietary funds, fiduciary funds. And then we have budgetary group codes. And then there are some accounts that don't have anything at all. And then there's a hyperlink there on the group codes. And we looked at this last week. And that gives you an idea of how different accounts have different group codes. So like GRIR clearing is AP for every basis of accounting except for budget. And we really don't have balance sheet accounts in the budget. We just have flow statement accounts in the budget. But for our gap basis statements, there is a group code for accounts payable. So that's just kind of how we structure it. And that way, I mean, when we do an extract to start building the act for every account comes out with balances and all of these group codes. Now, the system is set up so it's smart enough that it knows The general fund is a governmental fund and it will sign G 2100. Where it also knows that if it's a water fund, that it's going to give it a P 2100 for proprietary. And if it's fund 800 for FPDR, it's going to be an F 2100. And then it also knows whether it's a governmental type fund or a business type fund, and it gives it the the US group code that is relevant for the particular funds that transaction or that balance is sitting in. So that was all programming in the background that was built into the system when we built that extract program. So anyway. I think it's ready for the next slide. So financial reporting, which is now the APR, which is annual comprehensive financial report. And not everybody does an APR. A lot of people do just the basic financial statements, but possibly some additional disclosures for the related to bonds and stuff. So basically, starting at the audit report, MD&A, financial statements, note disclosures, RSI. That's the basic financial statements. It's sometimes called the liftables, because you can pull that out of the ACFR and you actually have audited financial statements. But for the ACFR, which here we get into what the GFOA has defined as being a comprehensive financial report. So it starts off with an introductory section, the audit report, RSI, which up front is the management discussion and analysis section. The basic financial statements, which is the financial statements plus the note disclosures. Then we have RSI, which we have budget schedules for our major funds, if they are the general fund or a special revenue fund. You don't put a debt service fund or a capital project fund back in the RSI section. And here we're just talking about governmental funds, the general fund and special revenue are governmental funds. And then we also have to do disclosures about post-employment issues like pensions and OPEB in the RSI. And eventually, once we've had enough years from GASB 68 and 75, we should have 10 years worth of data to give people a good trend analysis of what our post-employment picture is. Then following up RSI, we have supplemental information, which is our combining schedules, our budgetary schedules, and a statistical section. And there's another audit report at the end.
This is all prescribed by the GFOA.
Yeah. And I think the top one is a hyperlink.
Oops. Oops.
So we can, I'll just skim through it real quick. So introductory section. Yeah, you have to have your table of contents, and you will get GFOA comments if this isn't right. So after the table of contents is what? It goes on forever, doesn't it? So there we have a transmittal letter that is written by the CFO and the CAO and directed to the mayor. And we have quite a bit of flexibility here as to what we can put in here. Now, they say you shouldn't duplicate stuff from the MD&A here. But I'm not exactly sure what authority, because it's not Gatsby that's telling you that, it's GFOA, so. So, anyway, that's where you have a lot of flexibility to talk about the condition of the city here. Where when you actually move into the financial statements, we're very narrowly limited to what the Gatsby codification tells us we can do. So this does provide us with some place to tell our story the way we want to tell it. And after that, what do we got? There's our elected officials. And then an org chart for the entire city. And then we're an OMF, so we have the OMF org chart, and then we have the accounting division org chart, and we need to tweak that so that this is accounting and grants management division. And I'll get that updated. And then if you have one certificate of excellence in the prior year, you can put that in here. And we move on to the financial section, which is Moss Adams, in our case, audit report. And unfortunately, it was unmodified. Then we do the MD&A. And here, like with all our SI, you can only include what Gatsby tells you to include, and you cannot exclude anything that they ask you to include unless they're just not relevant. Like if we didn't have debt, we just wouldn't have to talk about our debt. So we do financial highlights, and then there's some boilerplate stuff about governmental accounting. And we do a government-wide analysis. Now, you can choose to do a 3-year comparison. We've opted for 2. And I've very rarely seen anybody do 3, but it is an option. And we kind of talk about governmental funds. A little bit of fund balance analysis and comparison. And we focus on our major funds here. And then general fund budgetary highlights. So this is where I was talking to you this morning about Schedule 56, where we kind of analyze our budget from adoption through all the adjustments of the year. That's where I need to be able to describe how the budget changed over the course of the year. Then we have to talk about capital assets and debt. And at a very high level, so I'm just talking about big projects that we did, our capital projects, and our big debt issuances during the year.
By the way, quick question, Ron. In that report in the budget that we are using for Schedule 56, you know the account type fields. Where did you get that? Because it's not in the report itself.
It's somewhere in the data,
If it's there.
and I wouldn't have been able to do a pivot table on it
Oh,
if it wasn't there somewhere.
Yeah.
Um,
I was looking at it.
look at the pivot table and get the fields list, and it'll tell you what field is where.
It's like where you get that one dash personnel, one dash SM.
It's got to be a field in
Is
the
a field there?
database. And I'd have to go into the pivot table and.
Because your heading
and
is
get the
kind
field list and see what fields we're pulling in.
because the heading is kind of bold, and so I'm thinking maybe you just inserted it or
No, it had to come from the data somehow.
somehow.
But I'd have to look at the field list to see exactly what field it was. And then we talk about, well, and here the city economist writes this for us. And we start with the government wide, and then we do the fund financial statements. And roll into note disclosures. I can just skim through this pretty fast. And then we do, and you have a little bit of flexibility how you organize all this. But this is how we've opted to organize it. But you have to have all of this information. It's just you have some flexibility about how you can organize it all and label it. But somehow you have to touch on base on all these issues.
You can keep going.
And
Okay, through the notes pretty fast.
yeah, I would just go through the notes section. The idea is just to give a feel for how that's what that slide meant.
Okay, we're 100 pages into the 400-page document.
And well, we can skip on.
Anything else in here to look
No,
at?
we can.
Okay,
So that's kind of the structure of an ACFR. And if you want the DOI certificate of achievement, you have to comply with this structure and provide all this information. Well, what's our next slide say? Okay, we're getting into the components of it. So the balance sheet or the statement of net position. So we got assets, resources the city controls, deferred outflows. So those are expenditures that are related to a future period, basically. And PFOA has been starting to switch from revenue and expenditures to and expenses to outflows and inflows. Then you have liability, which is obligations we have no discretion to avoid, deferred inflows or inflows applicable to future periods, and then fund balance, net position, are just the residual of all that. Yeah, deferred outflows and inflows is a weird concept, and people outside of governmental don't really have a good understanding or even understand at all what the heck we're talking about there. The best way I have seen it described, I think it was Mr. Crawford, is it's a parking lot for stuff that's related to future years. And for us, our future periods, like from on the modified accrual basis, our primary deferred inflow is is a difference between is a receivable, so we don't collect within 60 days after year end. So that really is revenue that's going to be recognized in the next period. A lot of our outflows and inflows on the economic resource measurement focus are related to pensions and OPEB. But there are some that are related to discounts and premiums on bonds that have already been refunded. But the bulk of our outflows and deferred outflows and inflows are related to pensions and OPEB, and mostly pensions in our case. So, what's the next slide? So, statement of revenues, expenditures, and changes in fund balance. So that's our current financial resources modified accrual. We have revenues and expenditures, and then other financing sources and uses. And then for government-wide and our proprietary funds and our fiduciary funds, we have a statement of revenues, expenses, and changes in net position. Now, I don't think that's what it's called for a fiduciary fund. It's called something different. But there we have operating revenues, operating expenses, and non-operating revenues and expenses, and contributions and transfers. After each of the statements, we want to make sure that they are materially correct. And for us, materiality is a big number. They need to be timely, which is why we try to do issue within 120 days so that our investors have timely information. Now, a lot of that would probably for 60 or 90 days, but right at the moment, we've been quite an accomplishment to get from 180 to 120. My guess is eventually we will get it down to 90, but that's not happening yet.
60 seems impossible.
60
seems impossible.
TriMat does it on a regular basis. They almost always issue it August 31st. Now, they are a single purpose government, and it's an enterprise fund, just one big enterprise fund. So it's a whole lot simpler than what we're doing. But they do it. Consistent over time. Now, sometimes I wonder about that because GASB keeps changing stuff. So our financial statements before GASB 68 and after GASB 68, when we implemented the pension standard, they changed dramatically. And then comparability. So you should be able to compare the city of Portland with the city of San Diego, and be able to compare and contrast to some degree. But the problem with that idea is what they do isn't necessarily what we do, like New York City. Also has a school district included in it. So you would have to strip that out. Somebody at one time was trying to compare Oklahoma City and City of Portland. But when I scratched the surface on it, Oklahoma City has a transportation district that does a lot of what our transportation people do within the city. So trying to compare transportation services provided by the City of Portland with Oklahoma City, it's difficult because you also would have to factor in that transportation district. But Gatsby does try the best they can to try to make things as comparable as possible. So. Chapter 2, hour and a half in, we're finally through it. So here we talked about the home rule versus the Dillon rule. So home rule, you can do anything that is not prohibited by state law.
Do what is allowed.
Hmm?
No, I'm just reading the statement.
For the Dillon rule is you do what is allowed by the state. And I think we're home rule. And we just have to make sure we don't do anything that the state prohibits us from doing.
There isn't one like that has the preference.
What is a typical example?
Huh?
What is a typical example of those rules?
Well, I mean, it would be driven by state law. So sometimes, I'm trying to remember, it seemed like in Montana, they gave municipalities a choice of which they wanted to do. So it's a whole lot easier to go through state law and figure out what isn't prohibited, and that gives you a scope of action. Or if you got to go through state law and only do what the state law specifically says a city can do. And there's some instances where we are limited like that. So like our share of the gas tax apportionment that the state sends out. So the state taxes gasoline and diesel at the pump. And the state collects that money, and that's tax revenue to them. And then they share that money with all the cities and counties in the state based on lane miles and population, and I'm not sure what all else. But then the state specifically prohibits you from using that money for anything but transportation. So in that case, we would be under the Dillon rule, where we can only do what the state tells us we can do with the gas tax, our share of the gas tax money.
Okay.
So then there are general purpose governments and special purpose governments. And cities and counties are general purpose. Special purpose, you got school districts, fire districts, water districts, and sewage districts. And it goes on and on and on. There is all sorts of different special districts that you'll find.
Yeah.
And it varies a lot from state to state.
So TriMet is special purpose.
Yeah.
TriMet.
Yeah. And for the public schools is special purpose.
I have another question on the home rule versus Dillon rule. So it's kind of situational. It sounds like, depending on what situation we're looking at, or is it more like a state by state?
I think I probably gave you a bad example. I think it probably has to do more with like property tax revenues in the general fund. Where the state might, some states might tell you what you can do with your property tax money, and then you can only do what the state told you to do with that general revenue. Where we can do anything with our property tax money unless there's a state law that tells you you can't use your property tax money for that. So the gas tax example is probably a bad example, because that's restricted money. So similarly, grant money is restricted. So here we're really probably talking more about unrestricted revenue streams.
Right.
That we have the latitude to do what we want with it. Like we can move it around from police to fire to parks. But you could have a situation under the Dillon rule where the state steps in, and we may see that happen as state legislatures want to take more control over what local governments do. So they might come in and say, okay, 30% of your general fund money has to be spent on police departments. And 25% has to be spent on fire departments. And 5% on parks and so on and so forth. So we could see, with all the political debate about how cities are spending their money, the state legislatures will step in and start prescribing how you can spend your general fund money. I haven't heard of that happening, but yeah, but I mean, there have been some circumstances where it's sort of got to that. Like there are some cities around the country that have started to prohibit new construction from using natural gas. But the state of Oklahoma, where oil and gas are important, their state legislature has specifically stated no city or county can prohibit the use of natural gas in new construction. So there has been some stuff like that where state governments have started stepping in and prohibiting local governments from doing things that the state legislature doesn't want them to do, or forcing them to do stuff that they want them to do. So we could see more of that happening, where state legislature starts stepping in and prescribing how general fund unrestricted money is spent. Okay, differences between public and private profit versus service motive. For us, there really isn't any correlation between how much people pay and how much they get. So back to my example, I've been paying property taxes for decades and have never called the fire department. At government, they're generally trying to get a return on investment and provide money to shareholders or owners, where we are taking care of the citizens' resources and trying to use them in ways that the citizens want. Now it's indirect because the citizens vote for elected officials, and elected officials decide how that, what that means. I really haven't experienced in my lifetime a situation where I agreed with 100% of what any government did, and I haven't disagreed with 100% of what they've done. There's always been things that I liked and didn't like. I accept the fact that as a citizen, that I am part of a group, and the group gets to decide how things get spent. Financial plan versus appropriation budget. So businesses, they usually will put together some kind of budget, but it's really just kind of a plan. And if revenues start to jump up, you're free to increase your spending accordingly, or vice versa. If sales of some specific thing start to tank, you've got the freedom to cut that budget and stop building that stuff and trying to sell it, because it doesn't make sense anymore. Where for us, it is a legal constraint. We cannot spend more than what the elected officials have told us we can spend. So it's radically different. And the citizens get, in those places, the citizens have some input. Like we've been having budget hearings for the last couple of weeks. And we got a budget committee, which is a combination of our city council and some appointed citizens who sit on the committee. And the citizens can testify and say, "Man, I really want you to do this," or "I really don't want you to do that," and try to give input to the elected officials as to how the budget is formulated and how the spending happens. So those are big differences between the two of them.
So what will happen then if, let's say, for instance, an unforeseen event happen where more revenues come in than what we have budgeted? So
So we do a fall bump and a spring bump. And the city economist is monitoring those revenue streams. And if they go up or down materially from what he had anticipated when he developed the revenue estimates, then we really need to respond. In particular, if it goes down, because we really should be cutting spending if it goes down. But we won't necessarily increase spending if it goes up. We could just let that fall to fund balance and be part of the next year's budget. So especially if you noticed it in the spring bump, you're only a few months away from the end of the year and the start of the new year. So you really might include that as an increase in your fund balance to start the new year budget and not change the current year budget. So for budgeting, you start off and you look at your resources. So you've got your beginning fund balance, which is cash and receivables plus your accounts payable, and any estimated revenues that you expect to come in, any interfund transfers that you plan on making into the fund, any debt issuances you want to make, you're planning on making to fund like capital projects. So you figure out what all those resources are. And then you can start figuring out how you're going to spend that money. and then start spreading it across the different services like the general fund, where you have police and fire and parks and a whole bunch of things that are being paid for, like us, out of the general fund. Now, we saw the increase example last fall, where we got to the fall bump, and the beginning fund balance, or last year's ending fund balance, this year's beginning fund balance, was way higher than the city economists had estimated it to be. And the city council went about spending that money. And so in the fall bump, they went through and, okay, we got $60 million more than we thought we would have for this year. So we can spend $60 million more than we anticipated spending, or we could save it for next year. But given the situation that we were in, they opted to start spending it. Now, an unanticipated increase in beginning fund balance is a one-time thing. That's not going to happen over and over again. So you really want to focus on your spending on one-time spending. So that was one of the issues that they came up with. Is a lot of the ideas for spending that money were really stuff that the cost would have gone on into the future. And that just wasn't appropriate for that type of money. Now, if you had a situation where some revenue stream had gone up unexpectedly, and our economist said, okay, well, I think that's going to continue into the future. Then you could, in the fall bump, go in and increase ongoing expenditures.
Makes sense.
But then 2 years ago, we had the opposite situation where we had COVID, and at the end of the year, revenues were cratering. So we responded with furloughs, and a bunch of people in parks were laid off, and a bunch of costs were cut. But then we soon after then got the CARES money, and then we had to go through and figure out, well, okay, we got another $100 million of CARES money, but again, that's one-time money, so you're really wanting to spend that on helping the people to deal with the pandemic, and not eliminate the furloughs, because really the furloughs were to cover a revenue loss in the general fund, where the CARES money was a revenue increase over in the grants fund. It's an interesting puzzle that they are always juggling with. The city economist is always kind of monitoring all sorts of factors that are influencing our revenue streams, and trying to predict that it is our resources going up or down to it, and then CBO in conjunction with the council and the mayor figure out, okay, well, this is what we should be responding with, and adjustments with the budget. Yeah, it is just a constant. So another difference is we have two measurement focuses, where, well, I mean, businesses can have all sorts of them. And we actually end up with 3 bases of accounting, because as we talked about last time, although budget and governmental fund gap is modified accrual, there are differences there are options you can choose within modified accrual that can create differences, and we made choices for GAAP and choices for budget that cause those two bases to be slightly different. Governments use fund accounting. You can kind of compare it to a business that has subsidiaries, but really it's not quite the same thing. And then we do budgetary reporting to demonstrate legal compliance. Now, the multiple measurement focuses, you can make an argument there, just like at one point I worked for an oil company that was owned by an insurance company, and the insurance company had a tax basis set of books, and they had a GAAP basis set of books, and then they had to report to the state on a third basis. And then the oil company had a GAAP basis statement, a tax basis statement. And then back then there was a windfall profits tax statement. And that was a totally different basis of accounting. So a number of businesses have multiple bases of accounting that they deal with. So I kind of disagree with GF way of pointing this out, but the bases of accounting that we use are pretty radically different than what government uses. I mean, so modified accrual is really modified cash, and a lot of smaller businesses in particular will use basically a cash basis. But it is fairly similar to what we do. In chapter 3. So types of reporting, we got internal, so we got our monthly reports that we do. And for us, we use budgetary basis there. External, special purpose. So the CFA is an example, which is we talked about last time, was the schedule of expenditures and federal awards. And then the external general purpose, which is our ACFR. Now there are a variety of external special purpose, like we do that U.S. Census one. And then we do I'm sure there's a variety of other things that people are doing.
What about our popper?
Hmm.
Our popper.
Our PAPR.
Yeah, is that
That's another good example of an external.
external
special
general purpose? Which is only a concise version of upper.
Yeah. And then internal, although we do a monthly report, and
Yeah.
several other bureaus do a variety of management reporting. Some of it really like water bureaus, is really sophisticated. So, so there's a multitude of different types of reporting, and each one of them have a special use and an audience that it works for. Oh, GASB codification. Since '84, GAAP has been codified by GASB, and it's been a gradual process. They have developed a variety of documents for public comment because GASB can't adopt anything until it has gone through the public comment period. If it's something that is dramatically new, like that new reporting model that they're working on, they will start off with an invitation of comment. And so like with that, I can't remember they proposed like 3 or 4 different ideas for a new reporting model and asked people to comment on each one of them. And then after they've that, there's the preliminary views, which is a more clarification of that. So in the case of that reporting model, they boiled it down to one idea, and then basically got comments again, and then they put out an exposure draft. Now, most of the time they just start with the exposure draft because it's uncontroversial and is just an incremental change from what we're doing now, rather than a dramatic change like that reporting model. And then those, what comes out of those is develops standards or concept statements or implementation guides or technical bulletins and interpretations. Now, I used to not pay much attention to concept statements. I have come to learn that if you allow, everything else is built on those concept statements. So if you allow a concept to be developed that is heading in a fundamentally weird way, in your opinion, then it's just a matter of time until that shows up in standards. So you really want to be responding to concept statements as they are coming out as exposure drafts. And if something you feel is fundamentally wrong with that, you really need to comment about it. Now, I commented that codification has been a work in progress. So when it first started off in '84, it was the work that NCGA did, which was GASB's predecessor. And then GFOA stuff and AICPA stuff, and then a variety of other documents that actually made up what was governmental accounting standards. And it's just been a slow process that GASB has gradually put together a standard that replaced some of that stuff. Like when we were doing that hierarchy policy, it was the one that we had dated back to an AICPA one, which GASB has subsequently now issued 2 new hierarchies. And Kevin fortunately caught the fact that I had missed the newest one, so we ended up upgrading our policy to the second hierarchy. So, what's our next one? Okay, so the GASB board and staff develop documents for comments, public governments, debt analysts, professional organizations submit written comments and testify at public hearings. The GASB board then issues documents that are integrated into the codification. And we respond through the Oregon GFOA's Accounting Standards Review Committee. I'm the co-chair, and Summer is a member. So we will have 2 people on that committee here soon. And we draft comments in response to anything that GASB puts out. And then there have been a few times where I went and testified in front of the board on behalf of OGFOA.
We've responded as a city once in a while, right?
We haven't. Now maybe we have written a letter specifically from us. I know that with some of the bigger ones, I'll try to also get the OSCPA government committee to just ends up in M2, but generally what happens there is we just take the OGFOA one and put it on their letterhead.
Mm.
I haven't been able to get that committee, so get heavily involved in the response, but it's important to get involved, even if they don't seem to listen to what you have to say. If you don't vote, you really can't complain about what the results were, so.
It looks like there's a link up here.
Now this is Gatsby's bars. And you can go in and, I mean, the city has a version, so if it's not on your desktop, you should be able to have Bill add it to your desktop. But you can also get into the limited one for free. You just go in and set up a username and a password, and it's not the full one that we've got through the city, but it works.
That's good to know. I didn't know we had that in the city.
Yeah. Well, and in our library, there's the paper ones too. And depending on what you're doing, the paper ones are pretty good, but the digital ones, like if you're wanting to do keyword searches and stuff, it's a whole lot easier to do that with the electronic version.
So we're at 4 o'clock.
Yeah, what's on the next slide? Yeah. That's a good place to. Sorry, so slide 19.
Yep.
Start off next slide.